In the midnight hour, she cries more, more, more. It is about the midnight hour here on Monday, 2:12 p.m. on this fine trading day. We have 48 minutes, 47 minutes left until ring-a-ding, ding-a-ding, ding, ding, till the bell tolls. Let's take a look. Let's take a look at it now. If you look, we're in 100% profit shape on our SPY call credit spreads, and then we're finally in the money on our put credit spreads because they've had a lot of downward pressure on SPY over the last half of the trading day. I've been taking a look at it now. It's currently up to 404.93. It was getting down in the low 404s. If we look down here, whoop. Let's see, 404.43. So during that time, of course, my credit spread was a dirty dog, but now it is, as we get closer and closer to the bell ringing, this number, if all things remain equal or the same, then hey, wait a minute. That means if you look at that number, it's saying we're down $11 or 57.89%. That means that the SPY just red candle down. Let's look, and there it is, a big red candle down. So we're doing it live as the perspiration rolls from my ever sweaty forehead. It's not sweaty, Bart. Don't gross them out. But we don't, there's a lot of volatility going on right here. It's trying to fight a little bit back, but we need that to close above 403, and it's currently at the 404.48. So we're still in decent shape, but we definitely don't want to see this bang, bang, and then zoom, because we could go from profit to taking a loss in a quick minute here on this put credit spread. See, I'm tripping over my own tongue because I'm nervous. I'm not actually nervous, but I wanted to look while we're at it. I wanted to take a look at the Qs. They're still up today. My thought was, can we catch a little call credit spread action between now and the end of the week? If you look, the highest was at about 309.27 over the last month, 309.27, currently at 333, but it's still in the green for today. So I thought there might be a little action to be had on the Qs for a credit spread to put on with an expiration of March 10th. So let's take a look at Qbert here and see what Qbert can do for us as far as some premium. Because I don't know, Jay Powell's speaking, or actually he's testifying the next 2 days, Tuesday and Wednesday, in front of Congress. And, they're going to be putting the old screws to him, trying to extract some information about what he's going to do with interest rates. And you know what? He's going to tell them the truth, which is it looks like we will be raising them continuously until we're all out of money. So let's look at Friday to sell a call. And I was thinking, how conservative do we want to be? If we're looking at around the 5 delta, there's a 5 delta right there. If we looked, let's pull that one off. Let's go with this. This is around a 6 delta. So 313 on Q. Yeah, let's take a look at that. So if we were to sell a call at a 23-cent credit and then buy back, what do you want to buy back? If we go all the way up here and buy back a 317, we'd have a 14 credit for a Friday expiration on this call credit spread. If we did 5 contracts and try to get it filled at 15 cents, that'd be $75. $75 with a max loss of 19.25. Those aren't good odds. Well, I don't know. I think the odds are that Qs are going to be sideways to down for the rest of the week. But that's just gambling, right? Well, kind of. But I think the Fed's going to, put a little damper on us over the next couple of days. But again, look for interesting tidbits of information that the news media will try to extract from his words and then turn them either into doom and gloom or dovish remarks, headlines. And the market has been so emotional that it will react to that. So we'll have to keep an eye on this trade very, very closely. But let's see if we can't get it filled, these 5 contracts on this call credit spread, which is expiring in 4 days, March 10th. So we got that on the board. Let's see. Let's take another look at the SPY, see what's happening. It's at 404.30 we got 42 minutes to go, but it's not looking good as far as putting the pressure on us. It's putting the pressure downtown to Chinatown on us, which means that the look of that trade on that put credit spread is going to be, far, what do they call it? Good from afar, but far from good, like the girl you used to date in high school. That's rude. Take it back. I'm sorry. I retract that comment, I should say. But right now, let's see, we're down $5 bills on that trade if we were to close it out right now, because we're trending, just trying to trend back up. Should we let it ride or should we close it out? If we look at closing it out, what are we looking at for bid ask? So it'd be 318. If it was 4, it'd cost us $24 to close it out, and we booked $15. So it'd be a $9 loss. We did book a $50 profit, or are going to book a $50 profit on the call credit spread today. There it is right there. What are you going to do, Bart? What you going to do, boy? Is it going to be roll the dice and take your chances, or close it out? I'm going to roll the dice and take our chances on this right here. I'm going to regroup for a second, then I'm going to come back before the bell closes. I want to try to roll out of some of these positions that are mostly in profit, roll them out a week, because, we like to roll the wheel of fortune on Blackstone and on Google and on various positions. And just in case Jay Powell puts some downward pressure with his remarks the next couple of days, if he puts some downward pressure on the market, we want to still catch some of the premium to roll these out today, rolling them out instead of a 310 expiration, roll them out to a 317. So let's come back and do it live. We'll do that live and then also give an update on the old SPY put credit spread that is making me nervous. So I'll see you in a few.